Welcome back to the Dream Home Doorway podcast, your guide to affordable homeownership. I'm Rachel Starrett, and today is a special sit-down with Steve Nordstrom, the operations manager from Red Door Homes, and Garrick West, senior loan officer with CrossCountry Mortgage. Today, we're diving into a topic that's on everyone's mind: how to finance and afford your home in today's real estate market. Steve and Garrick will break down the basics, answering your common questions about loans and why it might be the right time to buy, even if interest rates are a bit higher. Whether you're new to home buying or just looking for some straightforward advice, stick around. Let's jump in and talk about some strategies for financing your home affordably in today's market. All right, Garrick and Steve, I would love to start with having you tell us a little bit about yourself and your experience in the industry.
Thank you so much. I am Garrick West with CrossCountry Mortgage. I've been in the mortgage business for roughly 17 years, and I've been doing construction to perm loans for about 14 of those years. I live in the Raleigh area. I've been married to my wife for 15 years or so. We enjoyed traveling. The mountains are our favorite spot, and we enjoy live music. We have two wonderful daughters, Madeline, who is 14, and Campbell, who is 10. She is our social butterfly. She really loves doing just about anything with a ton of confidence. I enjoy cooking, often with fresh vegetables that Paige has grown in her garden. And last but not least, I am a leukemia cancer survivor of 2 years.
Great, wonderful. And long walks on the beach, you forgot that.
Yeah, exactly.
Okay, Steve, how about you?
Rachel, good to be with you. Steve Nordstrom. I'm the operations manager here at Red Door Homes of the Carolinas. Gosh, I'm a little bit boring because for my now 36th year in business, this is all I've done has been in home building, and I've worked all over the U.S., literally from the East Coast all the way to the West Coast, and spent a lot of time in the on your land home building space. And I've done nothing else. So I'm pretty focused on that part, or that being the only part of my career. I personally, I've been married to my wife for 36 of those 36 years in business. She's been on the entire journey with me. We've got two grown kids, and we make our home now near Raleigh, North Carolina, and absolutely love it.
Great. Well, welcome. I've been really excited to record this episode because interest rates have been a hot topic, specifically affording a home in today's interest rate market. And I know a lot of our listeners maybe don't have a ton of information about a construction to permanent loan, or they probably don't even know until right now that that's the type of loan that you need when you're considering, building a custom home on your land. But let's start with the basics. Garrick, can you explain what a construction to permanent loan actually is?
Yeah, a construction to perm loan is really what it says it is. It's a loan designed to help a future homeowner finance the construction of their home. And once the home is complete, the construction loan is modified into their permanent mortgage. The way we do it here is a one-time close, or they close up front. They do all the paperwork then, and when the home is done, they have a modification signing that turns it in from a construction loan to a permanent mortgage.
Okay. So sounds simple enough, but also complicated at the same time.
Sounds simple, correct? Yeah.
What type of loan programs can people take advantage of? Because I think a lot of people hear construction to permanent loan and they think, okay, well, that means I can't use my VA, or that means that I can't use a conventional. And so the construction to permanent loan and loan programs are a little bit different. So what can people take advantage of, and what about first-time home buyers?
So with our construction to perm here at CrossCountry, you can use VA, 100% financing. You can use FHA, which is 96.5%, and you can use conventional at 95%. So if you're in the market for a construction loan or for a home, you can use virtually any loan type that's out there. You can use your land as well as equity on any of those products as well. There aren't really any first-time home buyer specific products out there. However, FHA would probably be the best option in that space, given that it's the lowest down payment required.
Sure. Some lenders also work with USDA, which is important. And when you're working with someone like Garrick or a trusted lender, they'll be able to help you determine, based on your individual finances and financial situation, what type of loan program for a construction to permanent loan program is best for you. And so working with an expert can really help with that. Steve, what key factors should someone consider when choosing a builder specifically for their dream home in a high interest rate market?
That's a great question. And there's three things that I would focus on generally. The builder that someone chooses should be experienced in specifically the custom or the on your land space. That's really important. And a lot of times experience can be expressed in terms of volume. Here at Red Door, for instance, we're closing in on 2,000 homes completed over a decade of experience, a little more than a decade, in fact. And that's something that really counts for something. There's often a lot of small operators that move in, move out of the industry. And that experience, I think, is very, very important, particularly for somebody that is going into a custom home build experience for the first time. The other thing I think is really important is stability. And that kind of goes with experience to some extent. And I made mention of this, at Red Door, we've been here for well over a decade. And that really means something. We're a very well-capitalized company. We're actually a subsidiary of a larger company. And so we're here to stay. And that means a lot for people if you build a home to know that the company that you're contracting with is not only here today, but will be here tomorrow. That's pretty critical. And the last thing that I'd mention is connections. And what I mean by that is, for instance, Garrick and his organization, at Pure Red Door Homes, we have connections with a whole variety of not just subcontractors and of the like, but lenders. And we have lender partners and lender connections that we've been working with for many years. And so that's very valuable, that we can help our prospects, our customers, be able to get connected with lenders that'll suit them and be able to work for them.
Perfect. So just to add on to that a little bit, Steve, what are some of the benefits of a customer kind of working with a lender that's familiar with the builder partner that they choose? Or on the flip side, what are some things maybe that you've seen that have happened because a customer maybe worked with a lender who wasn't as familiar with a construction to permanent loan? What should people really look out for?
Well, where we typically try to guide people, towards particular lenders, we do that because those lenders understand the process and have experience in the process. And our lender partners have worked with us over a period of time where there's a great working relationship. And so oftentimes you use a kind of a hypothetical, if somebody brings another lender to the table, my cousin in Alabama works for a bank and they've said that they could do this. They're maybe capable of doing it, but if they don't have experience in doing a CP loan and guiding the customer through the ins and outs of the process, it can be pretty complicated and confusing and even intimidating. And so that's why we think it's always important to use a trusted lender partner who's worked with not just countless CP loans, but also that has worked with your builder and already has a familiarity about process, to where there's a level of business trust that can go between them as well as between the customer and the lender.
Sure, yeah. And in a high interest environment like we're in right now, you really do want to work with a lender who's familiar with the builder, because timing can impact a lot. And so it's really a key factor. And the quicker you're able to work with your lender and closing your construction loan, the better off you'll be. So lots of important things to consider. Garrett, could you explain the concept of a loan pre-approval? I know there's probably a lot of listeners who haven't done that before or who aren't quite sure what that means and how it can benefit those who are looking to secure a mortgage.
Absolutely. Yeah. So the first step to building a new home is definitely getting pre-approved. Without being pre-approved, the client simply doesn't know if they qualify for a mortgage at all. There are many rules and regulations for each of the loan types that I mentioned earlier that could benefit or keep clients from qualifying, from how the land was transferred to their name, or student loans that show up with no payments. There's a lot of quirky things that can happen. We have a simple process for pre-approval. All of the Dream Home consultants within Red Door are familiar with the process. They provide an email to the client and they copy me on it typically, and I respond and provide the client with a link to where they can get straight to my homepage and apply online. And within minutes, we can typically have them pre-approved and, the first step out of the way. And now they can get back with the Dream Home consultants and start, designing the home that they're looking for.
And one question, Garrett, because I think that there's a little bit of a misconception out there sometimes about, oh, well, I did a pre-approval. It wasn't for a construction loan, or it wasn't for a lender who offers a construction loan. I don't want to do another one because it's going to affect my credit.
Right. So and I have this conversation with the clients every time, because I'll ask them, have you been pre-qualified by another lender? And they say, yes, it was about 2 weeks ago. And it was, for instance, one of the TV lenders that you see pop up with all the ads. And I say, okay, cool. I said, we can go ahead and get you qualified for a construction loan and pull your credit again. And as long as within a 45-day window, the credit's not hit, it counts as one credit hit. So it's kind of a misconception that it's like you're going to a car dealer on Saturday and they're hitting your credit for 15 credit pulls. It's considered one credit pull within 45 days. And I have that conversation with the client.
Yeah, that's really important to know and that I think changed maybe in the past couple of years. And the reason why it changed is to empower consumers to be able to shop and to be able to find a rate and a lender that works well for you. And so thank you for clearing that up, because that's, I think, a really common misconception. Steve, affordability and financing. This is a big one. The two don't appear to go hand in hand currently. But is the definition of affordability changing?
Yeah, it really is. It's been an interesting topic because it's been a little bit of a shock to the marketplace over the last 2 years, where interest rates have been increasing at a rather rapid rate. Thank goodness that they're starting to fall off a little bit now and projected to fall off into next spring. But it's impacted what, frankly, people can afford in a home. Because the way people look at this, people don't look at it as, I'm buying a home that costs this much money or that much money. What they look at is their payment. What am I going to pay on a monthly basis? That's how everybody views this, views the transaction. So what you're paying in an interest rate impacts that enormously. What we've tried to explain to people as about what we see is going to happen with rates, as well as costs of home. We've seen a lot of folks over the last year or so that have said, well, I'm going to wait until rates come down, or I'm going to wait until prices get more affordable. We've tried to explain it as, from our standpoint, a window of opportunity. The fact is that costs in home building, just like anything else in an economy, are going to continue to rise over time. I often use the example of my parents buying a house in 1973. It was like a 3,000 square foot house. They paid under $40,000 for the whole thing. Well, costs have marched up and marched up and marched up since then. Even under the best of circumstances, the cost of the product is probably going to be increasing 2 or 3% per year. Unfortunately, in our industry, the costs of the product have been marching up anywhere from 10 to 15, even as high as 20% per year over the last 5-10 years. The costs are always going to go up. Now, the thing that is a variable is the interest rate. the interest rate can, in fact, come down a little bit over time. And that's where people have the opportunity to maybe refinance if a more favorable interest rate comes into view. So what we're telling people is that there's a window of opportunity here to start the process of designing and contracting your dream home and locking in the price before it continues to go up higher. But then maybe take advantage of falling interest rate later by refinancing a loan. The other thing that's really interesting is almost all the lenders that we work with will offer a free float down. If the prevailing interest rate is less by the time the house is completed and you're ready to do that conversion to a permanent mortgage, they'll float the rate down for free. So if you lock in at a 7.25% now, if it's at 7 by the time it comes time to convert to a mortgage from your construction loan, then they'll allow that to float down for free. And then, of course, as I said, you've always got the opportunity to refinance after you've closed for as long as you want to, or as many times as you want to. The other thing that people are sometimes looking at in order to move into or to contract their dream home is they're making some choices associated with what they might do now versus what they may do later. And by that, I mean, for instance, considering things that can be changed or renovated over time. That might be something like countertops, it might be flooring, et cetera. There's a lot of things that you can decide that maybe we can do that in a few years rather than try to pack it all in with the initial build. And that, can hold your cost of the product down a little bit, rather than have it elevated at this time, just kind of defray the expense over time.
Yeah, I learned recently as well with VA loans, you're able to refinance at no cost as well, which is great. I know we work with a lot of veterans. Thank you for your service, by the way. So if you are thinking of a VA loan, that's really great to know in this market. Definitely take advantage of prices while, they are lower. I read this the other day and I wanted to share it. In 1971, the interest rate for a mortgage was 7.33%. If you waited for interest rates to go down, you wouldn't have purchased a home until 1993. You would have rented for 22 years waiting for rates to go down. Meanwhile, the value of real estate quadrupled.
And that's, I think, what we're trying to say by the window of opportunity. We know that even under the best of times, that the cost of the product is going to be on the increase. Even if inflation is at 3%, which is, 2 or 3% is considered normal, it's always going to go higher, higher, higher. But rates are flexible. Now, I'm not trying to say to anybody that I think rates are going to be at 3% again. I don't believe that's the case. I think that window is closed. But the fact is that the opportunity is right now and for the foreseeable, short term to lock in the product, and then knowing that you've got some opportunity to be able to float the rate, if there's a more advantageous rate, in the near future.
Yeah, because I think a lot of people just look at the interest rate as being the end all be all. But really, as Steve's saying, that's the flexible part. It's the actual price of the home that's not going to change in that entire term of the mortgage. And that's what, we're really trying to help people to understand. There is power and flexibility in that interest rate, even when it's high. You want to secure the lowest price for the home possible, which is now. It's today.
That's
right.
That's exactly right.
Mm-hmm.
I use myself as an example. I've told people this quite often. My wife and I bought our first house in 1990 or 1991. We paid a 10% interest rate. You do what you need to do, but I got into the house. Mm-hmm. And then when I sold the house about 3 years later, because I was moving back to Texas, we made money on the house. and when we went to Texas, interest rates were more favorable. So, because of that at that time, and then we even had a variable interest rate mortgage that we took advantage of there, and ended up, in an excellent rate relative to what we were in Charlotte. I think I ended up in about a 7 or a 6.5 when I was in Texas. And again, that's the 90s, but it just goes to show you that there's all kinds of things that can happen that can make that rate more favorable for you.
Mm-hmm. And the quicker you can get into the market and start, creating equity, if you don't invest in other areas of your life, if you don't have stocks, if you don't have bonds, real estate is still one of the best investments that you can make. On average, about 4%. It does go up a year, I think, which we saw, crazy percentages during COVID, but 4% return on your investment is better than zero.
Well, you know what? I was just reading the other day about from an economist who said that home equity is still the greatest generator of wealth in the U.S. It is the most important thing people can do, and most people, as they're nearing retirement, have a huge chunk of their wealth in that equity piece of the house that they bought maybe 20 years earlier, 30 years earlier, what have you. So you're absolutely right. I mean, buying is demonstrably better than renting, no doubt.
Garrick, switching gears a little bit, how can someone determine what they can realistically afford, especially today, when building their dream home? Are there any simple tools or calculators that you recommend?
There are tons of tools out there on the web that anyone can use. However, going back to the question you had earlier, getting pre-approved by a mortgage professional is the only foolproof way of knowing if you qualify or not. I mean, I actually have a simple calculator on my phone for calculating payments. So people ask me all the time, well, what's the payment on, a $200,000 loan? I'm like, okay, well, today's rate is whatever it is, and run that. So you can throw an app on your phone, or you can just hop on the computer and do that. I go over the affordability aspect with the client at application. I talk to them about what their payment costs are going to be. And also I make sure that they're comfortable with both.
Totally. Because really, for everyone, it comes down to your monthly mortgage payment. Interest rates aside, cost of home aside, it all boils down to what you want and what you can afford to pay monthly. And that's really where, your lender partner will be able to make sure that you're going to be within a comfortable range for where you need to be for your income and your lifestyle. And that's really important. Here, we get this question very often, especially before someone has met with us. Do you recommend talking with a lender or getting a pre-approval before they start the search or after they've found the home that they are interested in? What is most advantageous?
I mean, I really think that clients should get pre-approved before they start the process. I know that's not a common thing nowadays. I know people go out and they shop and they'll stop by the Red Door offices and meet with the dream home consultants, and then they'll recommend the lender that can do the construction loan. But, with the programs that are out there and the way rates are right now, it's really important to talk to a client. Rates are difficult for a client to read. There's no real website out there that you can go to and see, okay, what is the rate on an FHA construction to perm or a VA construction to perm? And they change, every single day. So every single second of every single day. So I definitely would recommend that people get pre-approved first, but it's common for people to shop around a little bit, then get pre-approved, and then we can sort of get them into the payment and the loan product that's good for them.
Yeah, and I think in general, we definitely recommend getting involved in a pre-approval process pretty early on, whether that be before you meet with us or, as Garrett's mentioning, early in the discovery phase. And that's really so that you can truly understand what your buying power is. And that way, your builder or, your dream home consultant can help you choose a floor plan and options that fit within that from the beginning. And so you're really looking at options that are within the price point that you have. And that can really help doing that from the beginning stages, as opposed to maybe you fall in love with something that's 3,000 square feet, but it's $500 a month over what you're going to be able to pay. And so doing that discovery early on just helps you kind of stay within the path of affordability from the beginning. And that can provide you a lot of clarity and transparency and make that part of the journey just a little bit more enjoyable when you've got the information that you need to make an informed decision. Garrick, what are some common mistakes that people should avoid when navigating the lending process, especially when interest rates are concerned?
There are a lot of things that we go over when we're going through the mortgage process that people aren't aware of. Not just interest rates, but like, taking on debts, or like, for instance, buying a car, or helping someone else buy a car. They think that it doesn't affect them, but it does. But when it comes to rates, again, it's difficult for the client to accurately tell what the rate is going to be. And what we try to do with our clients is talk to them about the rates, talk to them about the payments, and make them informed on, what's best for them as a family or as an individual. What's good about our construction loan is we lock everyone in at their interest rate for 1 year up front. So they know right away, this is what my rate is, this is what my payment is, and so forth. Now, when it comes to the end of the loan, if rates are lower, they're able to lower their rate and take advantage of the better rates at that time, which is what the analysts say could happen for us in the next 6 to 18 months.
Yeah, absolutely. So kind of switching gears a little bit back to Steve in the same topic, can you explain the importance of having a clear and well-defined budget when working with a builder, and how this can help mitigate the impact of high interest rates?
Yeah, 100%. Rachel, the thing that we try to do at Red Door, and what I advocate every day, is transparency in the budget. So many potential clients have a little bit of a tunnel vision about what we need to talk about when it comes to budget. It's not just the house. There are many, many elements to the overall budget associated with building a custom home on your land. There's the land itself. We have a significant portion of our prospects come and talk to us that have not located land yet. And so that's a major issue with the budget. Associated with that is land development. People don't think about what it's going to take to turn the raw land into a viable lot for building a home. That can be a pretty significant expense. And so what we try to do is be very transparent and guide people in, if they don't have land, in choosing land that'll be very, where we can mitigate the costs of land development, which is usually, clearing, sometimes grading, private utilities are hooking into public utilities, driveways, access, all those things that can really add up. We try to be very transparent and develop an entire budget for our clients. That includes land, if they don't have it yet, land development, the house itself, and then, as we kind of talked about before, the options or the personal choices that they want to include in the home, and whether they want to do that now, or if they want to save some of those things for later in order to keep the house, the entire affordability of the project as viable as possible. So we try to make sure then that there aren't any surprises associated with what the holistic budget of the project is going to be. That's something that we feel like is important, and that some builders kind of neglect. That, they tell people, let us know when your land is ready and we'll come build you a house. We try to guide people throughout that entire process and make sure that they understand completely what the budget looks like and how that ultimately may impact their payment or their down payment or their cash out of pocket.
Yeah, absolutely. And I think it's important also to clarify for our listeners that you can roll the cost of purchasing your land and the land development into the same construction to permanent loan. So you purchase the land, we develop the land with you, and then you still have that one monthly mortgage payment. That's a common question, that we get. And I think that goes across all loan programs in a construction to permanent loan. Is that right, Garrick?
That's correct. Yeah, absolutely. You can get two contracts, the build contract with Red Door and the land contract on a piece of land. We marry them together, and just like a regular loan at that point, you have to required to put down your down payment and so forth. But absolutely, we can roll that into the cost of the loan as well.
And then on the flip side, I think Garrick mentioned at the beginning too, if you do own land, you do have the option to use equity towards or as your down payment as well. Speaking of down payments, can you share some insights on how they impact the overall cost of a home and how our listeners can plan for this? I know different loan programs obviously have different down payment requirements.
Yeah, absolutely. So the client owns their land. Typically, we can roll in all of the costs, the closing cost, the land prep costs, and so forth, and it'll be covered by the value that they have in their land. So the client can literally come into Red Door, they could pick out their dream home and get into a new home with little or no money out of pocket by just owning the land. A lot of people come in that do own their land. Steve mentioned that we have some clients that come in that don't, but parents will gift them their land, and there are specific ways that needs to be done. That's part of the process that we go over with them during the application to make sure that the land is acquired properly. And if the client, at that point, they have enough equity, then we just do everything typically with the equity in the land. If a client wishes to put down additional money, they're also welcome to do that as well.
And so what about down payments when you don't own land? What should people really prepare for? We hear 20%, we hear 40%. What's realistic today?
Well, on VA, it's 100% financing as long as we get a favorable appraisal in. There's no money required out of pocket. FHA is just like a regular FHA loan. It's 3.5%, and we do as much as 95% financing or 5% down on conventional. So the whole 20% thing is, there's some lenders out there that require that, but CrossCountry doesn't. We stick with the typical rules of down payment requirements.
Perfect. And so again, that's why it's important to, work with a lender who's familiar with the programs, make sure you're having different conversations so that you can find the right program and lender for you. Now, this is a question that we get pretty often, Garrick, for those listeners who might not have a typical 9 to 5, and we build for a lot of them. Are there any special considerations when applying for a mortgage?
Absolutely. Yeah, we do a lot of loans for self-employed clients. We do a bunch of loans for travel nurses who have, odd contracts and so forth, truck drivers, people that work like as a 1099 client that the taxes aren't taken out of their paychecks. We have to get their tax returns, so forth. But as long as, you're able to provide us with the tax returns and so forth, we're able to get those analyzed and so forth, and able to help them out with loans as well. If you have a unique situation, you definitely should talk to your loan officer about it and see if there's a way to make the deal work.
Perfect. Steve, are there any incentives Red Door offers that may attract potential home buyers? What should listeners be looking for to make the most out of their investment?
I think one of the things that's important to understand when we talk about incentives is that every situation is different. If you reflect back on some of the things that Garrick was just talking about, flexibility here is the key. People may have land, may not have land, may have the availability of land, big house, small house, big down payment, no down payment. There's so many variables associated with it. Now, Red Door does have programs where we're absolutely happy to talk to our clients about potential help with closing costs, fees, even interest rate buy downs. And but that, those are all things that are subject to individual circumstances and et cetera. But absolutely, we do have those kind of incentives available. And for people that don't need that help, we have incentives associated with, if they want to get that special countertop or upgraded flooring rather than help with closing costs, we do that too. And it's all tailored to the individual. We're a custom home builder, and we offer a custom process and a custom experience for all our customers.
Right. And as we said earlier, it's all about that monthly mortgage payment. And if you want to fit in those bells and whistles and that's more important to you, then, hey, as Steve mentioned, we've got options for everyone and what your wish list items are and what your monthly payment goals are. Steve, what strategies can everyday folks use to secure the best possible interest rate when they're looking to build their dream home?
Well, I'm sure Garrick is going to have chime in on this, but for me, from just the consumer, the customer perspective, or the layman's perspective, when it comes to mortgage and finance, I give people the advice of, when you're speaking with a lender and starting to explore what your options, what your opportunities are, be very, very transparent about what your circumstances are. When you go to talk to somebody like Garrick about potentially securing funds for a major purchase like this, they're here to help and guide. And so it's incredibly important that you be very upfront and transparent about, these are the obligations that I have already. These are the obligations that I think I'm going to have. I have four cars and 2 boats and et cetera, et cetera. Those are things that a guy like Garrick needs to know to be able to formulate the best plan for you. And so transparency and honesty is absolutely important. And then there's always the good old advice of, before you close your loan, make sure you don't take on further obligations like, a high credit debt, consumer loan, an auto, a car, credit cards, anything like that. And so that's just general, good general advice about making sure that you've positioned yourself in the most advantageous way prior to going into, a major transaction like your dream home.
And I'm going to kind of shift this question to Garrett to answer in a different way. What are the strategies that people can use, or the most effective ways to fix their credit score? What are the best tips there?
Yeah. So, I think the main question there is, what's a strategy for people to secure the best rate, on their home? Well, there's a lot of things that go into interest rate. People often say, "Hey, Garrett, what's the rate today?" Well, I'll come back with, 5 or 6 questions, and then they're like, "Oh, okay, it's not that easy." So, loan type, how much money you're putting down, credit score, and even at one point, your debt to income ratio had an effect on what your rate would be. The most common thing is your credit score. So if a client comes in and they apply with us and their credit score is, 760 or higher, well, that's top tier. So they're going to get the best rate possible of any of the loan programs that they wish to choose. If a client comes in and they're at 620, we can still do the loan for them, but they're going to be the bottom tier. And we offer to work with them to help them get their scores up. We have a program that's called What If Simulator. I can go in and take a look at their credit report and click on a collection or pay down a credit card, and it'll tell us over time what will the credit score go up to. And at that point, we're trying to get them to 660 or 680 for them to take advantage of the best possible rate. I've had a lot of customers come in that don't qualify in the 500s, and we're able to get their credit scores up even as high as over 700 with just a little bit of work, especially with medical collections. Medical collections now are easy to get removed from the credit reports. Matter of fact, they're required to be removed if they've been paid. So if you are listening today and you are worried about your credit and you still want to apply for a loan, don't let that be a deterrent. Give us a call. Let us take a look at it, and maybe we can come up with a solution to help you get your scores up so you can qualify for the best possible rate.
And that's a really good point. If you're listening, finding a lender who will work with you to get you where you need to be if you're not there right now is critical. And that's one of the reasons why we love Garrick so much, is because we do work, with a lot of customers who are working on their credit. And so Garrick has been able to work with them to get them to that 620 if you're in the 500s. And for a lot of people, they might think, oh, that's going to take 2 years. But you honestly don't know until you start and you ask and you look into your financial situation. And so we really want to empower you to get the information that you need to have transparency around your finances and how you can take steps towards making your dream home come true. Garrick, if somebody wanted to reach out with questions or maybe even to start a pre-approval, what's the best way for them to reach you?
Well, typically the client's going to show up at Red Door and meet with one of the dream home consultants, and they're going to pass along my information, my business card and so forth, or even share an email like I mentioned earlier, and I'm going to provide them with the link to do the application. If somebody's out there today listening and they want to contact me, they can call me on my cell 7 days a week. My cell number is 919-771-4688. I answer it typically, unless I'm doing something like this or I'm playing golf maybe or something, but I'm doing definitely answer the phone and give them a call back and try to get them to do that application as quickly as possible so we can get them in there with one of the dream home consultants and start designing their home.
Great. I appreciate that. Any final advice either of you would like to give our listeners who are considering building a home either now or in the future? Steve, I'll start with you.
Well, I guess selfishly, my advice would be seek out your nearest Red Door Homes location and come speak with us. But, all kidding aside, now is a great time to start a process. And, my pitch to everybody who's listening is that at Red Door, we truly pride ourselves on being here to help and we've used the word transparent a lot of times today. We love what we do, and we love the opportunity to sit down and talk with people and tell them what we can do and, how we can help make their dream come true. And that's what this process, this podcast is all about, trying to communicate to people what we can do that is maybe a little bit different than other folks in the marketplace. And one of those things is, partnering with people like Garrick, to where we can have a one-stop shop and a holistic home building customer experience that is very favorable for our clientele.
I love that. Thanks, Steve. Garrick, how about you? Any final thoughts for our listeners?
Yeah, I would probably go back to a few things Steve was talking about earlier. Is don't let rates scare you at this point, because if you're holding off for the rate to change, then you're going to lose the equity that you could have earned in a home. And you're going to also probably pay more for that home down the road, because we all know that, things go up in the future. So I would say, don't be scared now. Let's talk about the loan now. Let's get you pre-approved, and let's get you in to talk to a dream home consultant at Red Door, so we can figure out what you can afford and get you in your dream home as soon as possible.
Perfect. My final thoughts really are kind of around redefining affordability. And for those of you listening, really think critically. What are your must-haves and what's most important to you? Is it building equity, or is it square footage, or is it the bells and whistles, or is it all of it? But I think there's a lot of us that really need to think about what's most important. And is there anything holding you back from being able to purchase now that maybe you should think about or reconsider, or options like Steve mentioned that you could change down the road? Because now really is a great time, and we just might have to think about affordability a little bit differently, because for a long time it was square footage and bells and whistles, and I think that's just changing, and we have to change our mindsets too. I want to thank Steve and Garrick for sharing valuable insights on building your dream home, even in a market with high interest rates. Now, in our next episode on Dream Home Doorway Podcast, we'll chat with Mike Smith. He'll tell us all about finding land, choosing the right builder, and creating a floor plan on a budget. Mike's experience is not only inspiring, but also packed with practical tips for those of you venturing into the world of home building. So join us in the next episode as we continue on this exciting path of turning dreams into affordable reality. Until then, keep dreaming and building your path to your dream home.